Good morning, traders. It's Martin Luther King Day. This is E for eminywizard.com and marketwizards.com. Just before the open, about 10 minutes before the open. And a reminder to use risk capital you can afford to lose if you're playing this game. Today will be one of those weird days, with stocks and bonds closed. Many traders will just pass on today. And I'm just opening up so that traders who want to get their head in the game and get a head start on the week can at least be thinking about things. Taking a look at a couple of charts, our overnight chart. Don't forget we did have a resistance zone above us at the end of the day on Friday. They goosed it up right at the close, knocked out stops, and then typically after options expiration, they brought things back down and have come back to test support. So a lot of times I note that pattern. And for today, I'm thinking that the 30-minute chart is now in play. Some time is elapsing, and those larger time frame charts are now starting to catch up. So this is the chart that has caught my eye, and I think it is the one that we need to be aware of today. When the internals aren't there and stocks and bonds are closed, it's much harder for some traders to try to gauge their normal strategies and their methodology. And so you want to play light if you're playing at all today. It's a good day for you to play with the kids if they're home, or just go out, take a walk if it's not minus 10 degrees where you live. Fortunately, it's only 42 degrees here in Naples, Florida, but that's a heck of a lot better than back there in the Northeast. Looking at last week's range, we ended with a price of 71.5 at the settle, and then pushed up into the close. After the close, this was our layout. So I've got a line here back in at 50. We're calling 52 to 54 our aggressive support right now. And obviously the high of the day on Friday, resistance. One-year chart, we can see the range that's depicted here by this blue circle. That's our current range on a yearly basis. It's been up, up, up ever since the beginning of the year. First pullback into support. Everything has been bought since then. And at one point, we need a breather. Obviously, we're coming close to that point, I believe. We said in the 2-year perspective, this 2680, we were going to use as our resistance target. Got darn close to that on Friday, right into the close. And we can see the travel range from the beginning of this year as well as from the end of last year, where we held at 2375. So we've had a 1, 2, 3, 4 box move. That's pretty significant. We had a sharp down and then a very sharp bounce back. So if we're looking at that, we can't just assume we're going halfway back or anything, but we're going to go step by step. As long as 2680 is holding, and then backwards we're looking for this 2591, 92 area as our next key support basis, this relationship. Predictive model. Got the blue circle in the range right now that the market is trading. Generally speaking, we are looking at this 57 to 58 area, trying to hold. And I think right now the battlefield is going to be this 62.5 as our flipper. Above that, the market's trying to advance. Below that, we're trying to test support. And right here is 56.25 is the flip zone, according to our model. below that, and then starting to test support. And that would be considered mid support right here. Those of you with the system, these numbers you should find in the system and just plug them into your widget. And angels and demons. Yep, 58.5 as our angel. You can see where that's set up. And obviously 71 area, 70, 75 near the gap. That is our demon for today. So currently the 65 area is trying to hold the market down, and so far the very, very neutral overnight after the first push down at a subsequent low, but then we've come back and reacquired that low. So right now it's very neutral type trading. And again, I remind you, if you trade today, it's going to be very thin. And more than anything, you're just trying to get your mind around the market, ready to go for the week. That would be my suggestion. There's our RTH 5-minute chart. RTH low from Friday, travel range overnight. Blue box represents that idea. Opening in the 62.5 area, as we should. And anybody that's playing for the half gap, that would be in the 67 to 68 area. Right now we've got some trapped traders here, and the market's testing support. So more than likely we have an inside day today. Probably 70 to 80% probability we'd get inside day, meaning we will not take out Friday's high or low. And I suggested that we can take out the low, but still be inside Friday's range. So be conservative with your expectations, all I can say, and don't expect much today. Today is a day that after they do options X, they mess all the put options, clean them out, and then they'll do a little drawback. Favorite game of the boys. Knock out the shorts, trap the late longs, then come down and put a little squeeze on. A very typical pattern. And a reminder, this 59 area. An advanced scout, 59.25. A little gap down here you can see, just below us. So we had suggested earlier probably this 65 to 60 zone being resolved. And that's still what we've got for the last couple of hours. You play today and think about risk 2, make 2. Don't think about anything else. Very, very typical pattern that we would see after options expiration.